Hello everyone, let's get started. Today I want to cover 3 topics quickly. I have been asked by followers on Twitter and in YouTube comments. One of the topics I was asked by a follower to explain again is ODL, or previously called XRP. He wanted to know how it works and where exists which pressure on the price and who will make a loss in that, pending the price is high. I have made a screenshot of the ODL workflow, how it works. We can see on the left hand side the originators, like those who want to send money. And then it has to go via an exchange which has a ODL instance there. There we will have a buy pressure, because the higher the amount to be transacted is, the more XRP or less XRP at a higher price needs to be bought in order to be able to fulfill the transaction. The XRP is then sent to the second exchange, which is ODL enabled, and there we have a sell pressure, because we need to sell the appropriate amount of XRP in order to receive fiat money, whatever, in this case Mexican peso, Philippine whatever, and I think Thai baht. One question he specifically had against or towards having XRP having a high price is, who will make a loss if XRP is having a high price in that scenario from buying and selling? And my answer is no one, and I will explain. If you buy today Apple share or stock at $200, will you make a loss? Because you could have bought it 20 years ago for $2. Those buying the XRP on the receiving side, in order for fiat to be able to be paid out, are called the market makers. They're happy making a small percentage of profit per each trade, because they're dealing so many things that they're, even with a below 1% profit, they can live. In the table you see now, I tried to show the profits a market maker can make at 1%, at 0.1%, at 0.05%, at 0.01%, each at a trade of about 5 million or 50 million. As you know, and I will show that later on, that we have in target 2 at 100% market share, every 3 seconds a 50 million transaction going through target 2. So let's assume the market maker makes 0.05% profit on each trade, and he trades $50 million worth of XRP once a day. So per year, in 250 trades, he makes about $6 million of profit, which I think is quite a good return on investment. So basically we have seen how ODL works, and that no one makes a loss, because someone starting investing will make a profit anyway, and that'll be the market makers with the table I have shown previously. Now let's move on to the next thing I want to explain, which is a slow price increase, as Galgitron basically thinks it'll happen. In order to be able to explain that, I will need to go a little bit deeper into why I think a really high XRP price is required at certain percentages of SWIFT market share. In the table you can see right now I have basically changed only 2 rows to display different scenarios: the circulating supply and the percentage of the SWIFT market share. I have 1% of Swift market share, 5 and 10. I have 10 billion circulating supply, 2 billion and 20 billion. I personally believe it'll be way below 10 billion because most of XRP belongs to hodlers, and those getting new into the market will wait until they made a decent profit. They will not sell the next day after they bought. They want to make sure they make a decent profit. This basically gives us the first 3 rows. We know from target 10 analysis that in target 2 transaction analysis, that every 3 seconds a 50 million transaction goes through the system. That would mean at 1% every 300 seconds or every 5 minutes. At 5% that would mean every minute, and at 10% every 30 seconds. I'm assuming we have about 10 ODL exchanges. We know about 4 already: Bittrex, Bitstamp, Bitso and Coins.ph. Bittrex will open, or has opened already, I think, in Liechtenstein, which will make the Euro corridor available as well. And I'm pretty sure that will in due time follow others. Now the exchange XRP I have calculated like following. I took the circulating supply and divided by the amount of ODL exchanges, and then also by 2, because the XRP on a particular exchange is not everything for use. Most XRP will be hodled, so I take like half of it. Then in the next row I have volume per exchange. If we have 1%, we would have 50 billion volume in total. That would make, when we have 10 exchanges, that would make 5 billion per one exchange, more or less. That will give us, for a 50 million transaction, actually an even higher period, for about 3,000 seconds, roughly an hour. We would have about 30 50 million transactions per day at 1%, about 150 at 5%, and roughly 300 at 10% market share. The total volume of the total value of these high value transactions would be 1.5 billion, roughly 7 billion at 5%, and roughly 15 billion at 10% Swift market share. If we assume XRP is used every day, that would give us a price of 10, 50, 250, 500 or $50 per column. If we assume XRP, each particular XRP is only used every 10 days, that will increase the price immediately by factor 10. If we assume an XRP is only used once in 100 days, like you buy and after about 3 months you sell, then that would give us an additional factor of 10. So there you can see the figures already. Those prices seem to be quite high already, but that's not the end of the story, because we have to consider that the average lot size, like amount of XRP someone is selling, is roughly 5,000 XRP. ODL, previously called XRapid, has a time limitation of about 1 minute. Let's assume we can execute 3 sell orders. If we take the average of 5,000 XRP, then we could be buying 15,000 XRP. So for a not too high transaction of about 15 million, that already would mean that the price would need to be at least $1,000. And even that doesn't include the reserve the exchanges need to have, because we know, I've told that in the past already, that each exchange must be able to have between 2 and 4 times the liquidity in reserve for the amount or the value of transactions coming in. Now you may argue, yes, but 5 or 10% of SWIFT, we will never have that. So what did I do to actually be able to prove that the potential is certainly there? Recently, SWIFT told that 280 banks on SWIFT are basically responsible for 80% of the volume on the SWIFT GPI network. So I took basically a list from XRP Arcade website with all the banks and compared it with the top 100 banks list you can see here in the screenshot. And my wife helped me to synchronize the two lists, the RippleNet customers with the top 100 banks. And as a matter of fact, we have already now 30% of the top 100 banks on RippleNet. Okay, 30%. I'm pretty sure you can extrapolate that to the top 300. So 30% of 80% of the whole SWIFT market is definitely very close to 10%. So now we know that for high value transactions we need a high price. I have also shown the potential of RippleNet customers that we certainly can achieve at least 5% of the SWIFT market share already now. Now let's take a look what a slow price increase could mean. In the table you can see now in the columns I have increases in price 1%, 2%, 5% and 10%, and on the left hand column periods, could be days, weeks, months or years, 10, 20, etc. Let's concentrate on the 100. If it's days and we start at the current price at 30 cents, only roughly the 10% increase. But imagine that every day, that would mean we would need to have a 10% price increase. And for me that's not quite so slow. But in about 3 months time we would be in the 4 digits area somewhere. Okay, if it's weeks, then this 100 basically would mean 2 years, and I'm pretty sure no one wants to wait 2 more years. In this table you can see the same thing as before, only with higher percentages, 20%, 50% and 100%. That's the reason why I made the periods a little bit smaller, like factor 10 smaller. So here I wouldn't think of days, because I guess it's kind of rather unbelievable telling by the past that we would have a 20% or 50% or even 100% price increase every day. Okay, so let's assume it's weeks. So at 50% price increase per week, we would after half a year reach roughly the 4 digits area. That's in the 20 weeks row. That's roughly half a year and roughly 4 digits. That could be that this is actually like a plan to go, but I mean, come on, 50%. I mean, there are people who think the Shane Ellis theory will come in steps, but also that would mean like every week a 50% price increase, and that would definitely make the cost of the system possible totally. So the summary here is that I think a slow price increase is rather a no-go, because the price would take like almost years to get into the regions where we need it to be in order to be able to make high value transactions possible. The last thing I want to cover in today's video is a question which came from Manuel, a Swiss follower. He has been asking me why the current ILP implementation is targeting more smaller payments as opposed to high value payments. The reason for that lies in the fact that each connector must put away the amount coming in kind of in escrow, and only upon confirmation that money will come from the sender it will be released to the actual recipient or another connector. And if that's a high value transaction like 50 million, that would mean that such a connector would need to put aside the appropriate amount of whatever XRP or fiat, 50 million. If we split that now into packages of 1,000, there will be quite some of these $1,000 values, but this is something a connector may be able to do, to put away, if it's only for a fraction of a second. And that's the reason why they are targeting more lower, not low, but lower value transactions with ILP currently. And they say that the higher value transactions, like if you really still want to be able to transact a high value transaction over ILP, then you need to make sure that the layer on top, the actual application layer, takes care of the assembling of like 50 or 50, 100 or whatever other more amounts of transactions at $1,000 or so. And this makes quite a lot of sense in terms of taking or reducing the risk and responsibility of connectors, but I don't see it being a big problem for even high value transactions going through eventually via ILP. And with that, I want to thank you, and I'm looking forward to your comments on my video.